Hi there. Is Kenya's economy on the brink of sinking? Let's have that conversation. And of course, it's coming against the backdrop of what the Central Bank of Kenya Governor Dr Njoroge told MPs. In a parliamentary meeting of inducting MPs, the governor of Central Bank actually gave a warning indicating that the country's public debt needs to be managed. If not, the country could be on the risk of actually collapsing. And this is the very first time the Central Bank of Kenya Governor Dr Patrick Njoroge has given such a stern warning. And of course, we've all witnessed there have been figures being thrown out there in the public with regards to the ballooning public debt. And by now, you must be understanding that. Currently talking about the aggregate public debt in Kenya being at the range of 9 trillion Kenya shillings. Of these, over 4 trillion Kenya shillings is external debt and slightly over 3 trillion is domestic debt. You might be wondering, why this huge debt in the first place? Of course, we've all witnessed what the former regimes, more so the regime of President Uhuru Kenyatta, did by borrowing extensively to finance a couple of things in the country. Sadly, among the things which are being financed were recurrent items on the budget. And beyond that, also some development items such as infrastructure out there, which of course are good, but they don't bring the money immediately. They bring money over years. So as a country, if we're not able to be able to sort our expenses and also finance our debt, we might get in trouble. That's why the Central Bank of Kenya governor was giving this warning. And to give you an example, for every 100 shilling that the country makes, over 40 shilling goes to servicing the debts we have, which if you think about it is very insane. For every 100 shilling, over 40% goes to servicing debt. It might leave you wondering, what amount of money goes to sorting recurrent expenses out there, for example, salaries, okay? And even beyond that, what amount of money goes, for example, to do development? Think about it. Developments in counties, whether it's roads, whether it's building, for example, different kind of infrastructure out there. How is it possible if the country doesn't have money? That is the problem that we're facing as a country. And of course, the government of Dr. William Samoei Ruto has a lot to do to at least try to rectify this wrong so that the country gets back on the right track. You are all much welcomed to the Money Daily YouTube channel. My name is Afagza Sifunam. By the way, if you're new here, kindly consider subscribing to this channel for you to be getting daily updates with regards to how you could possibly multiply your money and also with regards to affairs happening in the economic space, politics space, and so forth out there. The government of Dr. William Samoei Ruto actually has 5 options. And this, according to me, this is my opinion, it has 5 options to try and see how to go about addressing this big problem. The very first option is to think about how to scale down external borrowing. And I'm saying so because of these debt portions, the external borrowing is the most risky one. We don't want to get to a position whereby as a country we're not able to service external borrowing and maybe have some of our key national treasures, some of our key national infrastructures out there be controlled by external entities. As we've seen in other African countries out there, we don't want to get at a particular point in time. So the president needs to devise a way of scaling down on external borrowing. Of course, the fact is very clear. This won't stop immediately. As such, the national debt is going to continue increasing. But there needs to be a way of scaling down on the public debt over the next few years and hopefully, if possible, even the next 1 or 2 years to get down with the external borrowing and even have to tame the appetite for domestic borrowing so as to ensure as a country we are living within our means. Because it doesn't make sense to be living beyond our means and we're getting deeper and deeper into trouble. And then the second option the government has is to expand the tax base. What do I mean? By saying expand the tax base, I don't mean really increasing the rate of taxes. It means tapping into other unconventional means out there, which the government wasn't tapping into before, right? To give you an example, is essentially thinking about how to tax different options of income or even different options of assets out there. For example, taxing transfers. For example, taxing transactions happening out there. For example, taxing consumption, taxing assets, and so forth. So we might see in the next few years, of course, we even saw in the last few years, for example, the government started doing taxing rent income, okay? It began a few years ago. This was one of the options of expanding the tax base. So you might see in the next few years, even the government expanding the tax base further to even jump into spaces we hadn't seen before. And by the way, I wouldn't even be shocked in case we even see, for example, the government start taxing things. For example, even the digital space, they could go very hard on taxing incomes made by individuals out there in the digital space. These are going to be ways of maybe the government tapping into means of expanding the tax base, which by the way is quite inevitable too. And then the third option the government has is to increase the tax rate, which by the way, guys, is the most painful option on this list. And more so, if the tax rate is increased on consumption of basic commodities. We've all witnessed there has been increase in taxes, for example, in fuel front, whereby the fuel price is increasing month in, month out. The government tried subsidy, which didn't work, so it increased the tax rate again. And of course, also we've seen on the electricity front, right? We've seen the pass-through cost, for example, changes in inflation, for example, forex and so forth have been passed to consumers, making the price of electricity in the country to increase and increase. We might just see such continued trend out there, even on the domestic items, the very basic items. Think about it, the unga, right? The salt, meat products, milk, and so forth. We might see the price of this continue to increase and increase because the government might just increase its appetite on taxing the basics out there so as to be able to raise more and more money to cater for the government's needs. So you might see increase in tax rate. And of course, what is going to hit the Kenyans hardest out there is in case the government increases the pay. If the pay on earnings out there increase, we might just see a huge kind of complaint in the economy. But if the government decides to do so, there is no option. Employers out here are going to increase the tax rate based on the existing laws. So we are waiting to see what's going to happen. But if the situation continues, then the hardest measure of increasing tax rate in the country might be inevitable, right? And then the fourth option the government has, which I think even Dr. William Samoei Ruto is thinking very hard about, is how to subsidize production. In other words, the government to invest heavy in production so that hopefully in the entire value chain, ultimately the consumption point, we might see the prices coming down, right? Even so, in the government, for example, increases tax rates and so forth, and even expands tax base, the end users, essentially the consumers, won't complain much because the entire food chain is kind of subsidized right from the production point. Of course, we've seen in the last few days, in the last few months, governments attempt, for example, to do subsidy on consumption, which hasn't been sustainable. To give you an example, the subsidy which happened in July, August on unga, for just those 3 weeks, we're talking about the government spending over 7 billion to subsidize consumption, which by the way, in the long run is not sustainable. So the focus should be subsidizing production inputs so that it can have a ripple effect to the end results, whereby consumption items can also come down in price, right? And then the fifth thing, which I don't need to labor much, is that the government of Dr. William Samoei Ruto needs to deal with corruption heads-on and very sternly. We've all seen where government coffers out there are stolen by individuals, people in power stealing resources from the public, right? Resources made, for example, to construct roads, to build dams, to even train our youth out there to ensure they get the best of training and skills to be productive in the job market are being stolen. The government needs to deal firmly with corruption out there so as to close all the conduits of stealing government resources and public monies out there. Through that, we might just be able to have more resources to develop our economy, and hopefully the government wouldn't have to resort into more stern measures to be able to stay afloat. What do you think? Do you think the economy is stable, or is it on the brink of collapsing? Share your thoughts down below in the comment section. Thanks a lot for watching. I look forward to share with you other awesome videos next time. Bye bye, and you all take care.